As Bitcoin continues to reshape the financial landscape, a new breed of investment opportunities has emerged. Bitcoin treasury companies. These firms, such as Strategy, Metaplanet, and newer players like 21, are publicly traded entities that prioritize accumulating and holding Bitcoin as core component of their corporate treasury strategy. For investors bullish on Bitcoin's long term potential, these companies offer a unique way to gain exposure to the world's leading cryptocurrency while potentially amplifying returns. But are Bitcoin's treasury companies worth it? Let's explore why they are an exciting addition to the investment ecosystem and how they align with Bitcoin's promising future. Bitcoin has solidified its reputation as a store of value, often dubbed digital gold due to its fixed supply of 21 million coins and its resilience against inflation. Companies like Strategy, which holds over 580,000 Bitcoin valued at approximately $62 billion as of May 2025, have embraced Bitcoin as a hedge against currency devaluation and macroeconomic uncertainty. This trend is not limited to the US. Japan's Metaplanet, for instance, has accumulated 639 BTC, positioning itself as Asia's answer to MicroStrategy. These firms see Bitcoin not just as a investment but as a strategic asset to preserve wealth in an era of rising global debt and currency instability. The appeal of Bitcoin treasury companies lies in their ability to leverage corporate structures to amplify Bitcoin's potential. By issuing debt or equity to purchase Bitcoin, these companies can scale their holdings significantly, offering investors exposure to Bitcoin's price appreciation without the need to directly manage cryptocurrency wallets or navigate exchanges. For example, Strategy stock has delivered a staggering 3,000% return since adopting its Bitcoin strategy in 2020, outperforming many traditional stocks and even Bitcoin itself in certain periods. This performance showcases how Bitcoin treasury companies can magnify returns when Bitcoin's price rises. Bitcoin. Um, Now let's look at the benefits of investing in Bitcoin treasury companies. Unlike buying Bitcoin directly or through ETFs, Bitcoin treasury companies often use leverage through debt or equity offerings to acquire more Bitcoin than their cash reserves alone would allow. This strategy can lead to outsized return when Bitcoin's price appreciates. For instance, MicroStrategy's ability to raise capital through convertible notes has enabled it to amass Bitcoin stockpiles of over $62 billion, significantly boosting its market capitalization. Investing in Bitcoin treasury company means entrusting Bitcoin's accumulation to experienced management teams. Companies like Strategy and 21 employ sophisticated strategies including Bitcoin yield metrics and capital efficient purchasing to maximize shareholders' value. This removes the burden of self custody and market timing for individual investors. Potential. The many treasury companies trade at a premium to their net asset value, um, also called as NAV, reflecting investor confidence in their ability to generate future Bitcoin yields. For example, 21 trades at to 4.9x is Bitcoin NAV, signaling market optimism about its growth potential. And this premium can enhance returns beyond what direct Bitcoin ownership offers. For investors who prefer to stay within the stock market, Bitcoin treasury companies provide a way to gain cryptocurrency exposure without venturing into crypto exchanges. This is particularly appealing for institutional investors or those with traditional brokerage accounts. Companies like Similar Scientific and Block integrate the Bitcoin into the treasury, which while maintaining core businesses, offering a blend of crypto and optional upside. While Bitcoin's volatility is often cited as a risk, it's also a feature that drives its long term potential. Bitcoin treasury companies mitigate some of this volatility by strategically timing purchases and using financial instruments to optimize their holdings. For instance, a new fair value accounting rule introduced by Financial Accounting Standards Board of 2023 allows companies to reflect Bitcoin's market value more accurately, reducing the impact of short term price swings on financial statements. This regulatory evolution supports the case for Bitcoin as a legitimate treasury asset. Moreover, the growing adoption of Bitcoin by corporations signals increasing mainstream acceptance that could stabilize prices over time. As of May 2025, 16 public companies hold more than 720,000 Bitcoin worth $70 billion, demonstrating significant institutional confidence. The entry of firms like Nano Labs and Cosmo Health into Bitcoin treasury space further underscores this trend. Bitcoin's price has soared past 108,000 in 2025, driven by favorable regulatory developments and institutional adoption, including US government's reserve holding $20 billion in Bitcoin. This momentum suggests that Bitcoin is transitioning from speculative asset to a strategic one, making treasury company a timely investment opportunity. Companies like Strive and Asset entities, which recently merged to form a Bitcoin treasury vehicle, has seen stock price surge of from of over 1,300% in days, reflecting investor enthusiasm for this model. These firms do not just be holding Bitcoin; they are innovating how capital is raised and deployed, potentially setting new standards for corporate finance. For investors who believe in Bitcoin's long term strategy value as a hedge against inflation and the cornerstone of the digital economy, Bitcoin treasury companies offer a compelling way to participate in its growth. They combine the potential of amplified returns with potential management and market accessibility, making them an attractive option for both crypto enthusiasts and traditional investors. While risk like volatility and regulatory uncertainty exists, the strategic approach of these companies and Bitcoin's increasing legitimacy makes them worth considering. As the world embraces Bitcoin's potential, companies like Strategy Metaplanet 21 are leading the charge, offering investors a front row seat in the future of finance.